This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, November 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn up 2 at 436 3/4. January soybeans were up a quarter at 1157 1/2, and December Chicago wheat was up 2 at 546 1/4. This morning, we had an export sales announcement, 792,000 metric tons of soybeans to China as for 25-26. Yesterday, we got NOPA set an all-time high, 227.65 million bushels. That was about 22 million higher than the estimate. So yesterday, all the fireworks were in the soybean complex. Rumors throughout the day that China was in for beans, and we saw a good sale here this morning. Justin, kick us off with a few thoughts on your mind, and then we'll throw around the room.
Yeah, Dan. I think impressive by any metric that you look at it yesterday with the soybean complex. So we opened sharply lower after Friday's, sell-off after the USDA report. And I think a lot of that, like we talked about yesterday, was just the disappointment in number of China, news that had been announced. Obviously, we broke right into buying. We talked about it before the open. We were 10 higher overnight, and then rallied to 35 or 36 higher during the day. So we took out, took out Friday's highs, which is really impressive. Doesn't happen a lot on that big of a break, and then made new highs for the move. So very impressive. The crush. We talked about this. I mean, I was surprised by the number, but we talked about you're going to see record crush numbers month in and month out as we've expanded this. All these plants are coming online from the biodiesel expansion that we've seen. So you hope that I saw overnight EPA suggesting or even more than the industry was hoping for as far as how much usage they want. So I think that's a positive. So you hope that the trade war stuff, as we've talked about, is a great short-term help for prices or for demand. But long term, we're going to need to build, domestic usage. I was thinking about this yesterday. So, you hope that we can start passing some, kind of use these, this 3-year trade deal with China, assuming that, they do fulfill it as a way to really build our domestic demand base. So that's kind of my thoughts there. And then, the other comment I would make is, China is buying beans above the market. Right. We talked about this, at the end of the day, it's a small dollar amount, even if it's uneconomical. So I do just want to keep that in the back of our mind as you are probably losing demand from non-China buyers at the same time that you're gaining this demand. So, it wouldn't surprise me if you're forcing, you look at open interest changes, you're forcing funds to get longer, whether it's, a combination of covering shorts or new length, this momentum traders. So you're getting a lot of things going in our favor right now. And I just think you want to keep that, realistically, I don't think it's a run out of beans scenario. There's just too many beans in the world and too many buyers can switch. But in the short run, it can disjoint a lot of things. Spreads have inverted in a lot of cases. So I would use that as a competitive advantage. We're so used to having so many headwinds, and now we've got a lot of tailwinds at the same time. I don't want to lose sight of that as a marketer.
I think it's a good point, and you've been making this point numerous times. But, if we look at it this morning, they're at about 10% of what they're supposed to buy or agreeing to buy before the end of the year, in addition to paying well over $1 above South America, Justin. So your point is it's more goodwill gesturing than it is.
Well, they're paying it's the deal. We talked about this, right? Like it's relatively small dollars to the hundreds of billions that they're trying to negotiate in the total package, let's call it.
Yeah.
So in the short run, it can disjoint things. We've seen this in previous years. Back in, 2000s, there was Europe decided they'd, only buy non-GMO corn. And so, that basically came from, South America, and South American corn premiums were $1, $2 a bushel over ours. And what happened is we got all the non-European business, right? So the market finds a way to buy the cheapest product. So every other buyer is going to flow. They may even switch bean cargoes to South America. A lot of stuff that they buy, they can switch because they're the same suppliers. So again, I'm not trying, I think when you force such big buying in a short window, you're going to have a bull reaction. And to see the spreads move like this too, just figure out, like, if I remember we were talking about this last summer, late summer, early fall, you had massively wide bean spreads, and for those that put their shorts and carried and put shorts out, out forward, and now you're getting spreads that are inverting. Good time to look at, do you move product now that you've got these, hugely appreciated nearby spreads? And, if you have to re-own something out forward or calls, like, just try to figure out where the best use of dollars is, like we always talk about.
With that big crush number, Justin, are we doing a lot of meal business? I mean, what's your opinion there on the meal side?
Meal's been impressive. I mean, the disappearance of meal has been very impressive, and I think just we've had such cheap prices because it kind of turned into the byproduct, oil, which is rare, right? So oil share got super high. It's still relative or very high. So you had cheap meal for a long time, and you had high animal prices, good margins. So I think they used a lot of extra. We exported it. We used a lot more domestically, which is good. So that's what the market's supposed to do, is find a price where you use more. So meal did that, and then since then it's been on a tear, right? You had a record fund short basically, and we were using it, and then you forced that short cover rally. So now you're kind of more normal priced. I'd say normal to a little bit high, but it was a quick rebalance, in the magnitude of what, 14 or 15 days. So I think you're going through that in the bean complex in general. And then you just got to figure, like I said, I hate to, beat a dead horse here, but, options were super cheap. It gave you a way to buy puts or whatever you needed for super cheap. And now everything rallied. A lot of revenue has flowed back into a lot of producers. So take advantage of it. Doesn't mean you have to go sell everything across the scales, but certainly strongly reevaluate your position.
Very good. Ben, what's on your mind this morning?
I think that we spent months probably putting on negative U.S. soybean positions, and whether it's options, corn bean spreads, South America, U.S., whatever it was, right? It was glaring that we were going to have a problem. And probably when we get done unwinding this, there's a little bit of a reckoning coming. But I think for now, optimistic that we did see some sales. We certainly are going to have to change the acreage mix with this market being back open to us. I think volatility will continue to reign in soybeans for a little while. And looking at corn, I looked yesterday, Dan, after you asked me between the 430, the 435, and the 440 strikes. I looked at the three big ones. I can't do the penny strikes. I didn't like when the Board of Trade introduced nickel strikes 20 years ago. But there's 125,000 D's open options amongst those three strikes. So there's a lot here to reconcile. In the next couple days. I would be shocked if corn made a new high, and I would be shocked if it went much below 30.29, where we bottomed out on Sunday night. I think it's just going to kind of grind around in here. If it doesn't, maybe there's a position problem there as well. Really great export inspections yesterday. Love seeing that in corn. Hope that we can keep that up as we start to hopefully get aggressive shipping beans. Justin and Dustin have mentioned numerous times that could be a little bit tough on corn with the amount that we have. And I still think that there's an underlying bid for agricultural things, and I'm not sure that I can fully explain why, but if you look at corn in particular, and maybe it's being buoyed by soybean strength right now, it's just not easy to sell when beans are up 30 cents. If you look at corn with the amount of acres we planted and the reported yield by the USDA, certainly spreads to me don't reflect that. I don't know why DC is so tight with this much ample corn. So I think potentially, hopefully we found a longer term bottom, and I think more first notice day. I don't know that delivery mechanics support a real big break in corn following that, but that's typically been the MO when we see big supply and lots of grower basis contracts. So looking forward to what happens next week, and then eventually, and I don't know when it's coming, but getting a COT report to see where the big players are sitting. And I think that you could have a little bit of volatility in that, especially if things slow down in beans and all of a sudden they're long 200,000 contracts, or maybe they're still short 80 to 100 corn, right? Where do they sit, and where's the poke spot there? So
Yeah, I do want to add something there. Just some of your comments, Ben, that triggered another thought I had is, it is November 18th. I do think there is a big rebalancing going on in commodities. You look at the real leaders, gold, silver, so basically precious metals, livestock, coffee, some of these that are at all-time highs, and corn, beans, wheat, kind of our products have been just the dog, of that complex. So as you get into the end of the year, you see these massive index funds that rebalance, the Goldman Sachs index, all those big ones, right? They start, the Deutsche Bank one, they start to rebalance, or at least they start, for lack of better terms, leaking how they're going to rebalance, what those new mixes are going to be. So it wouldn't surprise me, like wheat, for example, was sharply higher yesterday. Maybe there's some reports that come out to justify it, but I think there could just be a rebalancing as well, at the same time going on, that's creating even additional underlying support. You're seeing it in like you'll get like the Mag 7 will, sell off against, underperforming stocks late in the year too, as people kind of rebalance. So it wouldn't surprise me that we also have that going on.
Do you attribute to, it's looking at the Dow, another weaker session here, starting out this morning down 430. But are you seeing some of that in the equities as well, Justin? Or what's your?
I think so. Yeah, I think there's kind of probably a little risk off type thing going on here. In the end of the year, not having to wait to, it's kind of like first notice day for us. The smart guys kind of don't wait to the end of the year when they want to make moves that they know they have to make. So I think that could also be going on in our stuff too.
Yeah. Oh, that's a good point. We've got a couple of minutes here. Ryland, we're going to get a cattle on feed on Friday. I know some of the estimates are starting to trickle out there, but what are your thoughts here as we start the day?
Yeah. Well, yeah, cattle on feed looming on Friday. I think just in general, we're expecting about a 2% decline from last year as far as on feed inventory for November 1st. Placements and marketing should be down pretty heavily. It just kind of feels like we're still pretty tight out there supply wise, and overall, I think that's really been the narrative until you've seen a big just shift in how the administration kind of views beef prices and cattle prices. But for the most part, looks like futures did bounce yesterday, kind of extended that bounce, ran right into that 200-day moving average and kept going. So we'll see if we're able to kind of hold this momentum. I think a lot of people would probably try to pick a bottom here. Some new buying started to show up on open interest, but obviously there's this big looming headline threat right now between rollbacks of tariffs, border opening stuff. So, it's kind of like, the guys that are deep in the money on hedges, there's probably a lot to do, but overall, we're still at a pretty good price here. We haven't seen any cash this week, and we have made a bit of a correction, but the real story, I think, from a correction level has really been in the feeder cattle market. We're starting to, I think you're starting to see some buyers start to come out of the woodwork. Auction prices were a little bit more mixed on the summary report for last week. So we're seeing just kind of a deviation between kind of the western areas and the southeast. So it's just kind of a mixed bag right now. I think everybody's trying to wrap their head around what kind of the next step is, but it's definitely a market to keep your protection on right now, just in case we get anything kind of negative to push us through that 200-day moving average. I think that's going to be a big inflection point for right now. So on the hog side of things, still pretty quiet trade, kind of closed near unchanged yesterday. I mean, I think the market really wants to see some ample support in cash right now, but we're just not really seeing a big jump. So, I mean, we're just slightly higher yesterday. Carcass was down again. Belly's down 62. So, I mean, it just feels like there's still kind of a lot of pushback here overall, just to find some real support. So hopefully we can see some of that, but generally speaking, the technical picture just is not good right now. There just has not been enough fundamental support to really wrap your head around. So once again, just expect kind of a choppy session here to start for hogs.
Very good. Appreciate the update there, Rye. Just coming into the open, we get December corn up $0.0125 now at 4.36. January soybeans are down 2 at 11.55 1/4. And December Chicago wheat is down $0.0125 at 5.43. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.